the past trading session, all sectors were up 2.51%. Best sectors, financials, and consumer discretionary. In yesterday's market, we saw a blanket of red. That's been replaced today by a blanket of green, and it's got a lot of people feeling really happy. I'll do our daily run through of what you need to keep in mind and what you need to keep your eyes on. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome, and welcome back CTKS family. We can see that in the past trading session, the major indices did really well. We've started to move up in terms of optimism, but we're still stuck inside extreme fear inside the main markets. If you're new, a very warm welcome, and welcome back CTKS family. If you're liking the content, please smash that like button and don't forget to subscribe. We've seen some really good price action in the crypto market. What we're going to do in this particular video is stack probabilities to see if we continue to the upside or we've got overhead structural resistance. When looking at the Crypto Fear and Greed Index, it's currently 38, and we can see more and more optimism is entering the crypto market. Remember, the crypto is very risk sensitive. When risk goes up, crypto will be hit hard, but it's also generally the first asset class to recover from a risk-on perspective. The crypto market is currently doing really well. It's fantastic to see Vitalik just pushing up ETH's price. Just kidding, it's all intercorrelation and interconnection. Doge is doing pretty well as well. In fact, they all are. But if you're looking to tether to get a return, perhaps think differently. Looking at the greatest gainers, we can see Bonk right out there in front, followed by you know what, who let the air out, followed by Sui, Immutable X, Curve, Stacks, Radium, and Helium. Peter Schiff is not happy. Leading up the list of the greatest losers is Pax Gold, followed by Tether Gold, Story, and Leo, and that's just about it. The crypto market had literally $600 million worth of liquidation, and a little over $500 million of that was short liquidations. When shorts get liquidated, the price increases, and that's what this visual representation is showing us at the current time. There were 138,429 positions that were liquidated. When people get too fearful inside the main markets and inside crypto, what actually occurs is that the smart money just comes up and liquidates the hell out of those positions. And where are the positions accumulating in terms of liquidity at the current time? You can see around that 87,500. The markets are always magnetized into liquidity zones, and you can see here on a short-term basis the 89,339 area. If we zoom out a little bit to the 48-hour, we can see a lot of long liquidity is hanging out at the 86,187 area. When you look into liquidation heat maps, the important thing is to cycle through the different time periods. A lot of people will just post one liquidation heat map into social media and then tell a story. You must stack probabilities to understand where the greatest liquidity magnets are inside the markets. Don't settle for stories. Don't pay any attention to them. What you need to do is to interpret the data and to stack probabilities. The question is, what happened inside financial markets in the past 24 hours? Well, the VIX was controlling the markets yet again. And as it went down, everything went up. And I was talking about the VIX in yesterday's video and many more videos before that. The VIX is driving the bus of risk currently. When the VIX goes down, you anticipate and expect row 3 indices to come up, and that is exactly what happened. You don't need to worry about the news, just look at the charts. And when looking at the row 3 references from the cheat sheet, what we actually see here is the S&P 500, the Russell, the Dow, futures, and the Nasdaq futures are not as high as they were previously. So this indicates that there's a bit of a cooling off in terms of the futures. And with extreme fear inside the markets, yeah, that's pretty understandable. The Row 4 stocks did pretty damn well in the past trading session, especially MicroStrategy was up literally 8%. In the next trading session, if we get followed through from the major indices, it's going to look really good. Row 5 is crypto. Total crypto market cap came up literally 6%. Bitcoin and also look at Ethereum, up a little over 10% right now. And we're seeing a bleed inside stablecoin market capitalization. When this goes negative, it's a really good sign. It's kind of like the VIX, but for the crypto market. We've seen broad-based gains across the entire crypto market, and some of them have done really well. Doge, 12.24% up. Pepe just crushing it, nearly 14%. And we can see the VIX indications are coming down. Now, all this is pretty good. So what actually occurred was the VIX was coming down, it went up, and that's why we saw so much red inside the markets just a day ago. And now we're seeing so much green because it went down. Remember, price moves in a wave. Now, basically, retail will start to go all in and more because they've seen digit greens. Double-digit greens. With the CTKS method, we look really in depth on markets. Now, what are we seeing with net Fed liquidity? It is coming down. Bitcoin is coming up. We're seeing a bit of a bounce in the S&P 500, and we know that that followed declines over the past 48 hours. Bank health is still going down, but there's some optimism creeping into the bond market and also the stock market. Now, typically what happens when we get Bitcoin rising up like this and net Fed liquidity rising up as well, you can see that correlation between the S&P 500 and also Bitcoin here. So that correlation is pretty good. And we can also see this correlation. But when net Fed liquidity starts to come down, it often throws a bit of negative price momentum inside the markets. This is something that you need to be aware of. Market makers typically use fear against market participants, and that's something that you need to be aware of. It is very hard to unwire fear, especially when you follow the crowd. Just remember one thing, the crowd is generally wrong. We can see when looking across the major futures, such as the S&P 500, the Nasdaq, the Russell, and the Dow. Bitcoin has definitely led the way. Now, this is what happens when risk on starts to recover. The thing to always note, Bitcoin is a risk on and risk off indicator. If we're getting risk off, we would expect Bitcoin to come down. Risk on, we expect Bitcoin to go up. Just remember also, the price is always moving in a wave. When we get big risk off, we will get risk on, and it's going all the way through price action. That's what causes these waves: panic, fear, and greed. The real issue that we need to answer, or the question that we need to answer, are we out of the woods? Is everything fantastic and the market's set for a huge recovery? To answer that question, we definitely need to understand structure. When looking at the S&P 500 versus Bitcoin, what we can see is that they basically directionally follow each other. Now, when looking at the S&P 500, we can see it's under quite a bit of pressure. A lot of people will talk about bottoms being in and things like that. It's just irrelevant. Bottoms and tops, that's a bottom, that's a bottom, that's a bottom. Where the heck are the bottoms that people keep on talking about? It's just irrelevant. What you want to look at is actually something a little bit different. You want to look for trend changes and also trend continuation. When we look at the S&P 500 on the daily basis, what we can see is it is been under pressure for some time. It's starting to show a degree of positive momentum, but we can't say for sure that it's out of the woods because it is not. Now, a lot of people just want positive news, as if what we would say, if it's positive, it's going to cause the markets to go up. That's just fantasy thinking, but people have it. I know I had it when I was back 40 years ago getting inside financial markets. I thought if you spoke positively, there was some kind of voodoo magic and the prices would magically go up. How dumb was I? Unfortunately, a lot of people are caught in what I was caught in many years ago. So if people talk negatively about, oh, we're not just recovered yet, we haven't had a trend change, people think, oh no, don't say that, you're voodoo cursing my portfolio. Nah, that's just not the case. What you want to do is just look structurally and look realistically. After more than nearly 40 years inside financial markets, I can say just look at structure. So let's do that. Structure literally gives you X-ray vision. Now, one thing, a very interesting comment from yesterday's video. These structural levels are dependent on the level of fear and greed inside the markets. We saw yesterday that the VIX shot up. That meant that the S&P 500 would seek to challenge a lower level of structure. And we saw the VIX came down in the past trading session, which would mean that the S&P 500 would seek to challenge an upper level of structure. Just remember, price is always moving in a wave because of fear and greed. And when you think about these measurements of fear, like X number, 26 extreme fear inside the main markets, for example, they are there because that's actually what moves price in the majority of cases. Now, what are we seeing here? We saw that we had a very nice rebound from that 5100 mark, and we've come into this area of overhead structural resistance. Are we out of the woods? Well, from a short-term perspective, if we get above that area, we'll start to challenge this area at 5380. If we get above that area, we could have a very big candle up around the 5590 mark. So please bear this in mind. But the issue is, how strong is this structure right here? When you look at this, you just automatically assume all structure is exactly the same. Is it? No, it's not. We're going to zoom in and have a look at the S&P 500. We know that the VIX shot up in the last session and that brought the S&P 500 down. Now this time the VIX went down and it shot the S&P 500 up, and that's exactly what it's supposed to do. That's the volatility index. That's what it measures. Now when we look at structure, we need to look at what the levels of structure are, how strong they are. And when you look at all of this structural selling right in through here, as soon as we came up, the sellers just came in and hammered the living daylights out of the S&P 500, and they've been hammering it ever since. There is some slight positive sign here, so this is good. We didn't make a lower high here, so that is exceptional, but it's something that you must be aware of. There's a lot of overhead structure here, a lot of resistance, and the sellers will try to push it down. Now, if they do so and they get it below this 5260 mark, it could go down to the 5200 or even retrace back to 5089. But if they get it above, that's fantastic stuff, because when we look at the structure above this, if we get above this 5310 mark, we've got a positive CTKS gap up literally to 5380, and that will be a really good move if we get follow through. The other thing to bear in mind, around this 5090 area, we had some really good structural support, and that took a lot of layers to get over the severe panic inside the market. But this level was incredibly strong, and the VIX already started to retrace as of last video. And what we can see, we're challenging this. This could cause a consolidation effect or a downward effect on average, because typically what happens when price moves down, it will move up. When it moves up, it will move down. It's a congestion and digestion issue. Yes, the market has a stomach. All you need to do is to keep your eyes on the structure. If we get above this 5300 mark, it's looking really good. That is favoring positive outcomes. And why is that? Because generally, if you can't get above, you're going to the level below. So if we get above this specific level, around that 5300 level, that's really positive for markets, and it could move up rather quickly. My suggestion, when it comes to markets, look at the actual price action. It's like a farmer, you plant your seeds, you wander away for 5 years and you come back and it's all overgrown, all the birds have eaten your seeds and you've got nothing but a mess in your field where you just expected the best harvest ever. You've got to manage your harvest, and it's exactly the same inside financial markets. You must manage your positions, and to manage them, you must know where the structure is. If you're looking at a chart like this and just drawing up recent indicative price, that's nuts, because it won't help you at all. You need to foresee what could happen to price and where the key levels are. Now, when we look into Bitcoin, this is really encouraging. We had a lot of positive momentum inside Bitcoin recently, and it's going gangbusters. Now, just remember that you can have a negative wave followed by a positive, a negative followed by a positive. Look at all this. Price is moving in a wave, just like literally every day. If it goes down, it came back up, it goes down, came back up, goes down, comes up, goes down. But nobody would anticipate that this thing could retrace. Why? It's right here. It's showing you what it does in practice. You have to abandon all the fantasies of instant multi-billion, trillion-dollar wealth. Markets are like everything else. You need to know the rules. After it comes up, especially if it comes up really strongly, it favors a retracement. And if we got a retracement back to around that $90,000 area, that is completely fine. That is no problem. It's still maintaining the uptrend as it exists at the current time. And we are likely to experience some short-term people saying, this is a really good place to take profit. Just as we looked at the S&P 500, we also have to look at Bitcoin in the same way. We know that the past trading session was pretty good. As the VIX came down, what happened to crypto? It came up because the VIX measures fear. So if the fear is receding, guess what? Crypto is doing. It's saying, yay, fantastic. And it also came up in yesterday's price action. Now, what we need to do is to look structurally. We need to understand where the actual structure is and how heavy it is as well. Now, when we look around that 90,000, so 89,610 to 88,917, this is a really good area. If we get a digestion and it falls below 91,742, look how exact we are. We know exactly where the overhead structure is before it prints. We know that we're coming up to this particular level. Just zooming in here a little bit, you can see that 91,742 was a pretty key level. There are a lot of sellers there, a lot of shorts that say you shall not pass, and the market went, haha. That's another really good tip. When you get above a level of really heavy structure, so many shorts are hanging out here saying, it's got to go down, it's got to go down. And they turn into buy-side liquidity, so please be aware of these factors. What typically happens is people see positive price momentum and they FOMO like hell because they've got that fear of missing out. And when they FOMO and the price does something like this, they feel that they may have got it wrong and they may get out before something like this occurs. Remember, price is always moving in a wave. You have to be able and capable of managing wave-based price movements. Therefore, the way to approach this is to simply observe what is happening at structural levels. You can see this 93,432. It was a good level where the sellers could come in and seek to push the price down. Also note 93,085. This level, and we're literally coming into testing that overhead structural resistance at the current time. We've found a level of support here through 92,631. Now, what's the best way to read structure? If it gets above, it's going to the next one. If it can't get above, it's going to the one below. Always just bear in mind that these particular gaps, negative and positive, are significant. If we get some decay in Bitcoin's price, which would be pretty reasonable over the next 24 hours, if we challenge that 91,742, that could be a very interesting area. Also the 89,610 and the 89,157. Always prepare yourself for downside action, neutral action, and upside action. If we get above 93,432, we're going to challenge a lot of levels around that 94,330. They're light, but there's quite a few of them. And then just upwards to the 95,026. Remember, all you need to do is just to observe price in its natural environment. It's not actually rocket science or anything, it is very simple. Just keep your eyes on the VIX and also total crypto market cap. We can see total has done really well, but it's starting to struggle around here. We need to understand the structure of this particular chart, especially this chart. So when we pop it on, we can see that we passed through a positive CTKS gap and got stopped out at the $2.87 trillion mark. This particular area at 2.81, remember Bitcoin had overhead structural resistance. The entire crypto market cap was consolidating around that area. This is why it's so important to know where these levels are, and especially how strong they are, how clustered they are, and especially if they've got gaps, because those gaps do get filled. And if they get filled to the upside, fantastic. But if they get filled to the downside, you can take advantage of that as well. Make sure that you keep on checking the structural levels across different charts as well. Your money chart is what you put your money into, but the cross-referencing charts are very important to stack probabilities. And we can see on Ethereum, around that 1760 mark, we're getting into some pretty severe overhead structural resistance. That's not surprising. Total crypto market cap is inhabiting that zone as well. As you progress, you'll find that structure is literally everything. Structure explains the price wave. Structure explains, and especially intercorrelation in structure, explains why different projects or different charts actually act as they're acting. When we look at something like Doge, we know Doge has done really well. That also means it's going to get volatile as total crypto market cap and Bitcoin come into overhead structural resistance. This is a way that we can assess if total crypto market cap and Bitcoin have further price momentum in them, or they're going to consolidate or retrace. Please keep the structure in mind, especially in the next 24 hours. It's extremely important to keep positive. When you do your daily positive affirmations for abundance, financial success, and happiness, always realize that fear and profitability are inversely proportional. Now, what does that mean? The more fear you have, the fewer, the less probability that you're making consistent profits. Fear drives consistent losses. And typically what happens inside the market, you get herd mentality. So everybody sees when the price is coming down, it's going to zero. And then everybody jumps on that, social media goes crazy. And then as soon as it goes green, everything is going to the moon. But it goes down, everything is going to zero, everything is going to the moon. You cannot live this way and be profitable. It will literally drive you insane. So the key is to be dedicated and committed, to understand that we either win or learn. We don't need to blame anything or anyone. The markets just simply pay you if you know what you're doing, and they take money from you if you don't. That's it. You are not in competition with anybody else. A lot of people say it's like a gladiatorial match, and there's somebody which a really ugly human being on the other side is just wanting to take your money. That's absolute garbage. It is garbage. If you think like that, please don't think like that, because that's not the case. You've got millions of people in for millions of different reasons. Some of them are going short, some are going long, some are hedging, some are investing, some are trading. How could you say that all of those people have the same concept? That's crazy. That's scarcity thinking or scarcity thinking. And often that kind of rubbish is said by people who can only invest. If you trade, you already know that the market is a pooling mechanism for funds. It just literally pulls all the money in from all these different people, accumulates it into one bucket, and it pays people who know what they're doing, and it takes from people who don't know what they're doing. That's it. So you need to know what you're doing. And a lot of people say, oh, why should I have to know what I'm doing? Shouldn't it be just like I throw some money at it and it just pays me? Life doesn't work that way. If you're going to get really good results, you have to know what you're doing. There's a crazy concept that the harder you work, the luckier you get. You also have to realize that this universe is designed to make you succeed. So you don't have to get angry with anything. You can show kindness, integrity, and gratitude because you're not competing with anyone. How could anybody compete with you? You're your own unique human being. Opportunities in life reset absolutely each day. If you're making just small percentages, they can turn into incredible amounts. If you're managing the up and the down wave and all of those things, you're going to do well. You are worthy. A lot of people just self-sabotage themselves all the time. They're in such a dying hurry. They need to get the results now. No, not now, yesterday. Do they know what they're doing? No. Does that matter? Yeah. Of course it matters. It's like if you're a doctor and you've not gone through medical school, you haven't done your residency. You're not going to heal people, you probably kill them instead. Everything is structured in such a way that you realistically need to put the time in. But when you start, just start small and scale. A lot of people say, oh, I don't know what I'm doing, but I'm going to gamble really big, 100x leverage, I'm going to be rich. And they wipe out their account again and again and again until, of course, they learn. And when they learn without blaming, they say, I didn't really know what I was doing. I guess I better learn. And just always remember that your life pullbacks give you the strength for the next life rally. They actually prepare you for success. It's good to know if you're not getting the results that you want, it's coming from your mind. You are accountable, you are responsible. And the market doesn't give participation awards. Maybe school does, maybe employers do, but the market is not that way. The market is purely knowledge driven. If you look at what you're doing, if you're finding that you're getting consistent losses or you're staying out of the market, it's probably fear that's got you in its crosshairs. Just remember one thing, fear is a liar. Fear doesn't want the best for you, it wants the worst for you. Therefore, a better mind creates better outcomes. Now, what is a better mind? A better mind is a mind that looks at fear and says, I'm not listening to you. You're a useless advisor. And fear is a useless advisor. Fear will destroy your life. Fear says you're not good enough. You can't do it. Fear says so many different things, and fear is a liar. You must know that. Therefore, cultivate habits of courage. You're not going to completely eradicate fear. Fear is always there. It's part of the human condition. But a better habit is just to start small. Just be in the market. Everybody's screaming. Everybody's out of the market. Lower your position sizes and just get into synchronization. That will create a better life for you. And as you gain more insight into where the market is going, you can scale. And especially getting into the market when it's red, that definitely fights fear. BORSOG. And selling on green, that fights greed as well. So fear and greed, well, they're basically the same thing. One is the fear of missing out, and the other one is fear, uncertainty, and doubt. So when you combine these two things into what we call BORSOG, or buy on red, sell on green, you're ahead of 95% of people who are rampantly controlled by fear. Fear will destroy you. It will destroy everything good in your life. The best way to overcome fear is to literally trade. Because when you trade, you're not listening to other people's stories, you're not listening to their narratives. You're looking at the charts, you're determining by stacked probability how price is moving in a wave between structural levels. It is absolutely incredible to do. Kate and I really appreciate that you're here, and we're so grateful to be able to share this time together. If you find anything inside the creed to be useful, can you please let me know in the comments? I can talk more about it in future videos. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.